Let's answer some questions from Sunday's Market Outlook. First one, why do we use debt to GDP? Should a closer metric be debt to government income? We think of the debt as government debt, but it isn't. It's the economy's debt. It's more rightfully called taxpayer debt. So even though we call them government bonds, we should call them taxpayer bonds because the debt belongs to the taxpayer. When you go to the bank and you get a mortgage, it looks at your debt servicing to your income. The income of the economy, or at least the revenue of an economy, is GDP. So we look at debt as a percentage of GDP, knowing that our tax burden on GDP is at very low levels, 15% up to 20%. Once you get much past 20% of GDP in terms of the tax haul, it sort of works against the economy. So we just tend to use GDP. And there go all my devices in behind me. U.S. tax receipt in fiscal 2024 were 49% individual income, 35% payroll tax, with corporate taxes contributing only 10% of total tax receipts. Well, I guess you could sort of look at it that way, but I think the corporation pays far more than 10%, right? If the corporation didn't exist, individuals wouldn't have jobs, individuals wouldn't be paying income tax, and corporations wouldn't be paying payroll tax, right? So I don't know that we would say, oh, corporations are undertaxed. It depends on where each dollar of revenue goes. And then even after, if you're holding corporate bonds and you get interest from the corporation, you pay tax at your marginal tax rate. So the corporation is generating the revenue to pay the interest expense of which you pay tax on. If you get dividends from the corporation, you also pay up to your personal tax rate on that. So when we think about capitalism and corporate tax is 10%, the 10% massively understates the contribution to society of capitalism. Massively understates it. Not only that, if you're holding shares of these corporations that are doing well and they go up in value, you then have a capital gains tax as well. So if we look at proximate cause, you would say, oh, corporations are undertaxed. But if we go all the way to root cause, you find that capitalism, corporations generate pretty much all the tax base in an economy. Having trouble understanding why CAD appreciated against the US on Friday with the Canadian jobs numbers. Doesn't matter. The fundamentals of currency really come down to inflation differentials and interest rate differentials. So if you have the interest rate on CAD minus the interest rate on USD, if this begins to narrow, that'll put upward pressure on the Canadian dollar versus the US. And on Wednesday, Canada was on hold, the US cut. That would add strength to the Canadian dollar because the interest rate differential decreased. Wrapped up in the interest rate differential are all of the fundamentals that we think would affect the decision of the central bank. Wouldn't matter if the economy was falling apart. If a central bank was keeping rates high and wasn't going to cut those rates, then the currency wouldn't respond to the underlying fundamentals. It may respond to the belief that the central bank has to move, but it wouldn't matter what you point out. The mix of full-time versus part-time jobs doesn't matter. What matters is, does that report force the Bank of Canada to cut rates or to stand still or to raise rates, and that the currency will respond to that. So, yeah, we don't have to read the rest. It's all a fundamental argument. Your view on rates and ZQ are compelling. I have two questions. Does ZQ have liquid options? No, it does not. You also mentioned that long rates are aimed to be reduced to 3.35, the 10-year, and that's Bessent's plan. Are you playing this or have thoughts on how to play the longer end of the curve? Not playing the 10-year, but through duration in certain sectors, I do have exposure to that move. Mostly ZQ, because I don't know how the long end of the curve is going to respond, but I know there will be insanity on the short end. Trump will get what he wants. Why the market refuses to believe him, why the market went to such extremes on ZQ before the Fed meeting, I don't know. The market was pricing in fewer rate cuts under the new Fed chair than with a hawkish Powell. Pricing in fewer rate cuts. This is the silliest thing to do. Hopefully, the market will start to behave a little bit better. ZQ now is, it's recovered a bit, but from this morning, Wednesday morning, it was stupid. You're pricing another 3-4 basis points of cuts all the way into April of 2027. Where you have, 7 meetings under Trump's new guy. You telling me you'll get no rate cuts under that guy? You're going to get all your rate cuts in the first or second meeting. And everyone else on that committee will either fall in line or they will be targeted. They will be targeted for particular punishment by Trump. He'll move on to the next one. He's done with Powell. He's not done with Lisa Cook. Bostic resigned. Another one had resigned back in August. If you can't get on board the Orange King and you don't want your life ruined, resign. Just resign. I don't buy that Trump wants rate cuts on the short end that much while inflation is above target and has been for 5 years. You're... Okay, well, I completely disagree with you. He just wants a scapegoat and Powell for the K-shaped economy. No, that's Biden's economy. He doesn't need to set up a scapegoat. He'll just blame other people. He doesn't need to set anything up. He doesn't play 3D chess. He doesn't think ahead saying, okay, I need this. Let me do this with this guy so I can blame that. No. If something happens, he'll just pull a name out of the top of his head and blame them. It's never his fault. It's never his fault. Everything good is him. Everything bad is someone else. He doesn't have to set it up. He doesn't have to set it up. If the economy sucks, he'll blame whoever is the nearest Democrat to him. He'll blame that person. He plays checkers. There is no setting anything up. Cut 200 basis points on the short end of the yield curve and the long end will rise 200 basis points in his face. If he has the power on the Fed to get 200 basis points cut, he also has the power on the Fed to increase the size of the balance sheet by buying the long end of the curve. Right? It's not as if the dictator's only going to take your clothes. The dictator is going to take your whole house. Understand that the dictator has power to do everything to engineer the outcome that they want. The dictator will do whatever needs to be done. Period. Trump is a real estate guy. He wants a long lower more than the short end. Mortgages aren't based on the Fed funds rate. Not one bit. Also, if you look at I think you're still continuing on with your position. You disagree with me, and that's fine. But I would strongly suggest you don't make a bet against Trump being rational, saying, I'm going to be rational on this one. Looking ahead to 2026, are you going to position your portfolio for a coming up FIFA World Cup to be hosted by the U.S., Canada, Mexico? I guess two questions. Why and what would that look like? If so, when would be the right time to do that? That beats the hell out of me. Even though the event itself is relatively short-lived, I believe its scale may have a ripple effect on a number of sectors. Perhaps you could come up with a video early next year as we get closer to the start date. I guess I'm not seeing what you're seeing. So what? You got some things happening in the country. You're gonna have to tell me what you think. Consumer discretionary, like what? More iPhones will be sold. More clothing will be sold. Like what do you think will happen there? Consumer staples, beer. Usually prices will respond to some future trend. This is an event. It's not a trend. It's just an event, and it is questionable what the environment will look like when this happens. So it's not clear enough to me what kind of trade there would be there. That is anything more than just an event. This is, if anything, this would be, I guess, a trade, but good luck figuring out which one it's going to be. It's not clear to me what it would be, so not really. It's not something that I would look at and say, oh my God, you got to be in on this. No. I'm not saying no, that it'll have no effect. It's just that it's certainly not on my radar as something that would be interesting. Why do you think Netflix stock fell when it announced it was buying Warner Brothers, and also when Paramount made a counteroffer? Why is it being penalized on both sides? No shit. So it makes an offer, it looks like it's going to get it, the stock falls. It's being outbid, looks like it's not going to get it, the stock falls even more. It's like, we don't want you to have it, but we don't want you to not want to have it. So we're going to punish you both ways in the same direction. So I'm sure if they raised their bid, they'd be punished even more. And if they got outbid from that raised bid, they'd be punished yet even more. I bought more today. I bought more at $92.50. Because it's just stupid. I mean, it's simply just stupid. Do you see the potential terrorist checks as a threat to your ZQ position? No. I don't think that's going to happen, because that is such a stupid thing to do. It's such a stupid thing to do that I don't think he's going to do it. What he's going to do is he's going to do his rally campaigns and lie to all the people who want to be lied to. And he's going to blame this person and blame that person. He's going to tell everyone we're lowering rates. It's the rates that are causing all the problem. If we had lower interest rates, you'd have more investment because it's too expensive to. And he'll play that. But sending these checks out, I don't know that you could get a stupider idea. But then again, this group of people running the show have not shown themselves to be good on execution. Some of their ideas are okay, but their execution sucks. This is one where the idea both sucks, and if they do it, I'm sure they'd mess up the execution badly as well. No, I don't know that this would bother me too much. Because it is an event that would just disappear. It wouldn't hang around. It's an event that would, you give somebody $2,000, they're gonna go out and spend their $2,000. And then it'll be gone, and the investor class will have it. When the government does that, it gives it to consumers first. Consumers run to the mall and they give it to us. They give it to the investor class. So we get it anyways. I don't know why he just doesn't hand it to the investor class right away and leave the consumer out of it. But, could you share your current view on DeFi? Do you think decentralized finance could become a meaningful alternative to traditional finance markets, or will regulation cap its long-term potential? Um, Look, this word has been thrown around for so long and it's still struggling to gain a foothold. Solutions to problems don't take this long to adopt. If it's something, it would have had a lot more take up a lot faster. So are there little pockets here and there? Yeah. Yeah. Much like, there are still some people who eat fake meat. Impossible Meats and Beyond Meat still sell something because there'll always be some small group that it appeals to. Um, but you know, if there was something here, if this thing was a big solution to a problem that people had, it wouldn't take this much time, this much convincing, this much work, this much discussion, this much conversation to get done. Hearing about DeFi now for 10 years. Well, get on with it, right? Get on with it. Certainly not in my life. I can transfer money from one bank to another bank across a border, no fees, no crypto involved, in about 3 minutes. That's how long it takes, about 3 minutes. So, do I really need to go from 3 minutes to 1 second to get that done? Do I? I mean, the extra work that I got to do to set everything up, it's not worth it. It doesn't solve a problem in my life, and I feel that given the transactions that I do in 3 separate countries with 3 separate currencies, I'm sophisticated enough that these solutions, if they are a solution to a problem I have, would have already appealed to me. And they haven't. So I'm going to go ahead and say no. Besides, I want my bank involved. I want my trusted third party. I don't want to rely on someone or a company I've never heard of before. Straight line depreciation strikes me as strange for computer chips and technology in general. And discussing technology is fairly uncontroversial to say that the GPU's value is front loaded over the first half of its useful life. Well, there's useful life and there's economic life. So the asset is meant to match the economic life of whatever revenue stream it's supposed to produce, and an asset is only classified as an asset if it does have the potential to produce value in the future. Once it has no potential to produce value, it cannot even be listed as an asset. It has zero. So if I'm going to use something over a 4-year period, if that is the economic reality of how I'm going to use it, I should match the cost with the revenues, or match the expenses with the revenues. I don't know that it matters that there is the rapid depreciation in the beginning. Reporting for shareholder purposes is very different than for tax purposes. For tax purposes, there's a much faster depreciation cycle for these things, and a much higher rate that reflects a faster declining balance. So for tax purposes, there's one way of doing it, and for reporting purposes, there's another. And because of the deferred tax liability or deferred tax asset that's created, the balance sheet will reflect that reality. Even if the income statement doesn't, the balance sheet will, because you'll have this deferred tax liability that you have to put in place, because you're reporting less depreciation than what you did for tax reasons. Your carrying value of the asset is higher. That'll create a deferred tax liability. So the economic reality of the real world may not show up on the income statement, but the economic reality of the way the company does business shows up there, but the economic reality of the real world will be reflected on the balance sheet. So, I don't know that I would get too wrapped up in straight line versus any other way of doing it. I'd be more concerned about 4 years, 5 years, 6 years. Does that really make sense? If it starts stretching it out to 7 and 8 years, you have to start saying, well, does that kind of make sense? Are there any authors or resources who have this supply side argument of inflation that you would recommend? Just use your best AI. It's been written about ad nauseum. Whatever AI you prefer to use, start with a prompt, a simple prompt. Give me a brief description of supply side economics, and give me a rundown of how it unfolded under Reagan's first term. AI is a library of unwritten books that will write you whatever you want based on the prompt that you give it. AI is an expert that is sitting there waiting to be interviewed by you. Use it, right? That is something that you can easily get from AI. I don't know that I would go to Amazon and buy a book and read a book linearly from front to back. Books are dead. I said that. You can print it somewhere and you could say, this guy is saying this, books are dead. People who write books, I think there'll be fewer and fewer and fewer of them. Books are dead. The idea of reading something from the beginning to the end. Everybody would require a different book. I read some books and you look at the chapter 1, chapter 2, you go, but I know all this stuff. I know all this foundational stuff at least, but I got to read it just in case you build an argument in chapter 2, section 2.3.1 that I'm going to need in chapter 5 and I'm going to be lost. So I got to read this. But now with AI, I can just say, tell me about this. And as I can read it, I could say, expand on this a little bit more. Tell me something about this until I say, okay, I got that. Let's keep on. Let's keep going. You don't need me for especially history lessons like that. I've heard you talk about vol, arb, and gamma scalping. I was wondering if you would be kind enough to list your favorite mechanical trading strategy in the order of preference. Some others I've heard about are calendar spreads, stat arb, nah. Bid-ask capture. No, you can't be on both sides of the quote. Your broker will shut you down. You can only be on one side or the other, and unless you have some kind of ability to when you sell, hedge, and then buy and unhedge, right? I mean, if you have that ability to sell at the offer and buy at the bid and have a good hedging in the middle, off you go. But you're going to need to play both sides of that. You're not going to get it done realistically without size. And yeah, I don't know that there's much in there. Favorite mechanical strategies. I don't know that I have favorites. Different regimes require different strategies, but as soon as you fall into a favorite, like if I say the hammer is my favorite tool, suddenly you'll start seeing everything as a nail. That you'll be carrying around your hammer all day long saying, well, it kind of looks like a nail. And you'll try to make a nail out of everything because your hammer is your favorite tool. Once you have a favorite trading tool, everything you look at, you'll say, it kind of fits. Yeah, let's use it. So I don't have that. Understanding battery storage. There has been truly significant work done which I could not resist. Let me read this again. Hey, Mark, I want to thank you for the work on understanding battery storage technology. There has been a truly significant work done which I could not resist from reading for several hours. Okay. Throughout the document, many beginners would encounter new terminology, and though it is all clearly presented, the interconnections among things like thermal management, structural enclosures makes it hard to put it all together into a single step-by-step. I know you like people doing their own homework, but I wonder if you've considered adding any diagram like pictures that put it all together. That's a whole other thing, because I don't have a skill set at that. And if you've used Nano Banana, it is just not good at following instructions. I mean, it's not, it either gets it on the first pass or it doesn't. But as soon as you start saying move this, move that, change this, it can't keep version after version straight. It's so to start doing graphics is kind of tough. The best graphics are the ones that are .orgs, because you could just take a screenshot of them, and as long as you're giving attribution to them, you're okay. For the most part, I think. As long as I'm not reselling the PDFs, I don't have to get copyright, all the copyright agreements in place. And the graphics, the AI graphics are just not quite there yet. Do you think another risk to ZQ is Trump will back off in lowering the rate if the long end responds badly to it? No, he'll just have the Fed buy the long end. Those of us who want to follow along the ZQ trade but don't have access to CME options futures, what alternatives would you recommend? There are no other alternatives. There are no other alternatives. It is it, and that's it. I work in corporate banking, where I'm pretty restricted on personal trading because of NMPI considerations, and everything I do goes through compliance. Yeah, that is a problem. Given the nature of my job, I'm trying to figure out whether the new applied level pre-market sessions would still be valuable for me from an educational and market context standpoint. Well, the pre-market sessions that I do really are about where's the risk today, not where's the return. It's not like I say, let's buy this, let's do this, let's go here, let's go this. Where's the risk today? We want to be aware of where the risk is. And risk could be to the upside. The risk is that we rally straight up from here to the end of the year, because risk is two-sided. No risk, no return, right? Risk could hurt you and risk can help you, because you get paid for the risk that you take on. Is it worth taking on beta risk going into the end of the year? After the Fed meeting today, I think yes. So you'd want to increase your risk exposure. Well, even if you have buy and hold portfolio, you can say, well, I'm just going to buy the market. You should be able to do that without compliance, buying the market itself. I mean, even if you knew of company A is going to buy company B, if you're just buying the S&P, I don't know that you would need compliance for broad-based ETFs. Maybe you do. But it's if you get risk down, if you become a good risk manager, reward takes care of itself. So we lead with risk. And starting January, it's going to be every morning. Where is risk? Is there a repricing of risk from yesterday? Does the world think that we have more risk or less risk? Thoughts on this? Google tells advertisers it'll bring ads to Gemini. It was already experimenting with ads in Gemini. And I had said this a while back. Ads are coming. There is no doubt about that. You got to pay for all this stuff. Ads are coming. Period. Ads are coming. The free side will be full of ads. The $20 tier will have ads. I'm an ultra subscriber, which means after tax and everything, I'm close to $400 a month. With that, I get YouTube without ads. It would suck if suddenly they stick ads in Gemini for me. I would have a real problem paying that much money having ads, because at that point I'd say, if I'm going to have ads, why am I paying you $400? So I better not have ads. I better not have ads. But yeah, ads are coming. Ads are coming across all of them. All of them will have ads. What do you think about SpaceX IPO next year? I think nothing of it. Nothing in particular. Is the company a leader in the sector? Yes, they are. In the space economy, they are the big one, hands down. So in the applied level, I did do a PDF called "Understanding the Space Economy" when we highlighted Rocket Lab 3 or 4 weeks ago, or 5 or 6 weeks ago. Tesla is the big one in the room, especially at the heavier payloads, meaning going higher than low Earth orbit. Tesla is by far the leader, and I believe they are profitable. Starlink provides a lot of cash flow, and they keep building that out. Well, they need to, because I've had Starlink and it sucks. So you're going to need a lot more satellite coverage, which they continue doing. For ZQ, seeing that the market is pricing in 1.8 cuts by May 27, how many more contracts would you buy? I'm at 500. That's where I want to be. What point would you decide you're wrong on the thesis, aside from Trump dying? At what point would I decide that I'm wrong? It's an asymmetric payoff. There's so few cuts in. I mean, all I got to get to is we're at 3.5 to 3.75 right now. That's where our rate is. I got to get to 3 to 3.25, and that is basically very close to a break even for me across all the contracts. Very close to a break even. I'd need maybe a little bit more, but very close to a break even. And I need that by October. There are 6 Fed meetings up until that point. 3 are without Powell. And AI is killing jobs. I don't want to hear we see no evidence. I don't want to hear any of that stuff. I'm hearing more and more people who are on Bloomberg saying we use AI in our organization and it is great. Some are saying we're using AI. They're trying to get full agentic AI. It's not there yet. But as far as increasing the productivity of your superstars, it's there. Compared to just a year ago when it was nothing. A year ago, at this time last year, when I gave it a try, I thought, I can't get anything of any value out of this. It's taking me way too long, and this output I can't even use this output. Then when we got to April, it was like, whoa, this has really come along. I was impressed in April. The stuff that's coming out today, the stuff that I'm getting today, the usefulness I'm getting today is way above what April was. And it's only November or December. Where are we going to be in 6 months? This will destroy jobs. So the idea of only getting 2 cuts between now and then is ridiculous. And if you do have a massive increase in productivity, that's deflationary. At least it's disinflationary, if not deflationary. So the data is going to give the Fed more than enough permission to cut, number one. Number two, the U.S. cannot afford this interest rate, this level of interest rates on this size of debt when your politicians have no desire to stop with the deficits. No desire, no willingness at all to stop. Number two. Number three, Trump will get what he wants. He's not kidding. He wants 2% now. Now. Not over 4 years. He wants it now. I got everything going for me. When will I decide that I'm wrong? The biggest threat is Trump dying. I need him to squash the lives of FOMC members who stand against him, because that's what he does best. That's what he does best. I need him alive. He dies? Yeah. I got a big problem. Or at least I think I'd have a big problem. But I do think that the data would unfold in such a way that I'd get the rate cuts anyways. Is there a way to hedge ZQ in the event of massive inflation? Trump dying? Yeah, my ZQ position allows me to take on a hell of a lot more beta risk than I normally would. A lot more beta risk than I normally would, because if the markets fall, all that beta will crush me, but ZQ will be beautiful. And if the market continues to rise and ZQ doesn't help me, guess who's going along for the ride with big beta? Me. So the hedge against it is to lean into the bull market. Heavy. There you go. Right? Because I have my left tail insurance protection that will pay off big. In your My Approach to Portfolio Management video on YouTube, you give an example of how retail investors have the edge on institutional investors using the takeover of Northview. This is a merge arb strategy, as discussed in the hedge fund strategy section, alternative investment trading. Yes, it was. Well, I wouldn't call it merger arbitrage. Arbitrage means that you are long and short in such a way that you end up with a risk-free position that pays you more than the risk-free rate. Right? That's arb. This was half the arb. It was long the takeout candidate without being short the private equity fund that was taking it out. You're just long the takeover candidate. That's all. If just like with Northview, there's similar opportunity that is a done deal, could I not use options to leverage my returns? No, there'll be nothing in the options. Once it's pretty much a done deal, the options are dead. There'll be nothing in the options because no one's going to stand against it for zero capital to bet against it. They're not going to do it. You buying the target means you have to use cash to get it done. And it should return slightly more than the risk-free rate if it's a done deal. Slightly more than the risk-free rate. Did the EQB acquisition of PC Financial catch your eye? Nope. So we can pass on that question. Many thanks for the Understanding Battery Industry document. I assume this should have taken you a while to prepare. These take about a week to do. Wonder why you didn't pay attention to BYD, CATL, or SunGrow stocks if they are considered superior in the long term due to sodium technology. I do sell puts on Run. Oh, that's SunGrow. No, I didn't go into those at all. The document was on battery storage, so it's the companies that provide that solution. You can look at the whole value chain and say, well, why not the makers of the battery cells? Yeah, you could have, but that's not what the document was about. It was about energy storage within the battery itself. And your players there, I chose Fluence and EOS. Tesla is probably the biggest one in there, but they have sort of like an Apple type operating system, which is proprietary to them, whereas Fluence has more of like an open system that can handle any battery. So it's, in anything that I do, I got to pick and choose something. I can't do it all. And no matter what I do, somebody will say, well, how come you didn't do this? And how come you didn't do that? It's like, well, if I did, the document would be 20 million pages long so that nobody could say, oh, you didn't cover this, right? That means there'd be only one document to rule them all. It's just the way they're written. It's like I'm focusing on this. And yeah, there are these... You can go up in the value chain, say, well, the suppliers of the cells, but that's really not what I'm talking about here. So, yeah. Federal funds down 3.6 to 3.4 next year, basically one cut. Well, if you take the FOMC as gifted prognosticators, in other words, you're saying, oh, it's the law. These guys are right on the money, and they are going to stay with their predictions no matter what. It's carved in stone. These are the worst predictors They are mostly wrong. Mostly wrong. The worst predictors. All year long, 50 basis points, 50 basis points. What do we get this year? 75. 75. Right? You said 2, we got 3. That's 100. That's 50% more than you said. So you were off by 50%. They're saying 1 over the course of next year. Or is it, 1 over the course of next year. That's just their best guess today. This is the best guess from a group of people who are mostly wrong. Mostly wrong. And usually predict only good stuff in the future. They're mostly wrong, so I don't know that I would read that and say we should respond. The market should position for that. The market should understand that this is just a group of people with a bad track record of predicting. Looks like we're at terminal rate neutral about there. Nobody knows what the neutral rate is. It is a theoretical concept that changes depending on what the market conditions are. Right? It is not some fixed number. And honestly, I think any rate could be the neutral rate. You had interest rates up around 5%. It did not slow the economy down one bit. From 2010 to 2020, you had interest rates at 0. It did not encourage inflation one single bit. Well, which one's the neutral rate? 5% because it didn't slow the economy down? 0% because it didn't encourage inflation? Right? I mean, any number can be the neutral rate if the output, if you look at the outcome and you say, well, we have growth and we have employment and inflation is trending sideways but slowly coming down. Maybe this is the neutral rate. But what happens if you go down another 100 basis points and you're still there? Well, maybe that's the neutral rate. What happens if you go to 0 and you're still there? Well, that's neutral. That's what I believe we're in. We're in a situation where pick a number. Any number is the neutral rate because I don't think the interest rate does very much work. I don't think the interest rate does very much work at all. If it's the balance of supply and demand, the interest rate works on demand by attempting to crush demand. But in America, if you hand somebody a paycheck, they will spend it if interest rates are 0, if interest rates are 1%, if interest rates are 5%, if interest rates are 8%, they will spend it, all of it. 8% interest doesn't encourage them to save. They don't say, oh, maybe I shouldn't go to the mall and spend my whole paycheck because I can get 8% in money markets right now. That doesn't enter into the calculus of most Americans. They spend every penny they make. The interest rate really is just a waste of time. If you want lower inflation, you massively increase supply. Paradoxically, that means in an advanced economy which doesn't have hyperinflation, it means lower interest rates, not higher interest rates. And if you get lower interest rates and you get a surge in supply and you get a decrease in inflation while the economy is strong, well, then that's the neutral rate, right? So I think we have an over-reliance on this mystical thing called a neutral rate that sits somewhere where we all think it might be or might not be. No, doesn't. We are now in a plausible range of neutral monetary policy. We were last year. We were at 0%. We were at 2%. We were at 5% in a plausible range of neutral monetary policy. That was all plausible. Growth to accelerate next year. This is a forecast, again, from a group of people who are horrible at forecasting. If they worked on Wall Street, if this was a research crew that worked on Wall Street, they would have lost their job years ago. Years ago. They're so bad at this. As expected, rates most likely not in moderate restrictive territory anymore. I don't know that I would be paying attention to these guys. Quick question on XLU. It looks like it's been in a mild down trend since mid-October because the long end of the curve has been going up. So the discount rate on those future cash flows for investors has been coming down. The present value of those future cash flows are lower. The idea that inflation is primarily driven by government regulation is interesting. I've heard it mentioned as a factor before, but hadn't considered it as the primary driver, but I think it makes sense. Usually interest rates are number one, and government spending and supply side shocks are number two. Speaking only from real world experience, the relationship with interest rates seems weak, yet it gathers almost all the attention. I agree with you. Technically, government regulation could be classified as a self-inflicted supply shock, and that's exactly what it is. I wonder if there is an index tracking the amount of regulation. You could use something like this to predict forward unexpected inflation, as most inflation models I've seen focus on government spending and interest rates. I think you're on to something. There's a dissertation. That's a dissertation right there, to create an index of government regulation and then to back test it against periods of inflation as interest rates rise. The 70s will give you a great laboratory for that. The 70s, that decade was known as a decade of regulatory boom. Regulations just appeared everywhere, and what appeared? Inflation. Then regulation disappeared everywhere through the 80s, and what disappeared? Inflation. There's your lab right there. There's a beautiful data set. You should enroll in a PhD program, sit through the two first interesting years, because you get to debate in seminar rooms, and then painfully write that dissertation. I've just given you a nice look back period in the data set. There you go. I think that takes us through everything. Yep, that is our Q&A. If you are on YouTube and you're asking questions on YouTube, I don't answer the questions on YouTube anymore. I haven't for a long time. I answer them on Discord, but there is nothing stopping you from joining Discord. The link to join Discord is, if you look at the last market outlook, is in the description box. Each week there's a code up that's good for 7 days and 50 people. And then you can ask your questions within Discord. Going into 2026, when you go into Discord, by the way, you have this green. See the green versus the orange over here? Orange means they have more permissions. Green is just what I classify as A1. So they have access to just a few channels, but beginning in 2026, A1 will have expanded access to certain things. So it is worth coming over to Discord. By the way, in coming over to Discord, I'm asking you for nothing. I'm not asking you for anything. I'm not selling you anything. You know, it's not like, oh, he wants me to pay a monthly fee. No, there's no monthly fee on Discord. So you can look at the last market outlook that I did on Sunday, and look at the description box. You'll see a link. Go ahead and click on that, and if you have questions about the video, here is where you can ask them. You will notice that I don't get stupid questions. I don't get the YouTube stupid questions. Oh, you're so laughably misinformed. You know, this 21-year-old who's got it all figured out thinks that I'm laughably uninformed because I'm not saying things they already believe in. I don't get that kind of stupid stuff on Discord. So if you have a curious mind and you really have questions that you want to know the answer to, come on over. If you are going to ask dumb questions, it's so easy for me to completely ban you. And that's it. And you can't come up with another Discord name because you need another phone number. So if you're already on Discord somewhere, you're not going to sacrifice your name and start coming up with aliases because you don't have that many phone numbers. See how nice that is? I only have to get rid of you once. All right. That's it for this week.